This is the Rodney Bull Show, bringing you truth about money they never taught you. Now, here's your host, the man himself, Rodney Bull.
G'day, legends. And what's cracking, money stackers? Welcome back to the Rodney Bull Show. All right, well, we're going to dive back into the second half of this fantastic interview with Paul Musson this week. And I guarantee you, as much as you got out of the first half of this whole interview, the second half will go even deeper and you'll get a whole lot more out of it. So without any further ado, folks, we'll just dive back into it, eh? Strap in. You reckon there's a lot of talk about growth being driven by debt. Where do you think most people misunderstand this idea of something from nothing, mate? And is this sustainable long term?
So debt, listen, there's nothing wrong with debt as long as, it's put to productive use. You put it to productive use, you create capital, you give yourself the wherewithal to pay the debt back. And there's nothing wrong with taking on debt if you're buying a home. I mean, who can afford to pay cash for your first home? Or if you're buying a car. But using debt to or for consumption, or policymakers encouraging debt-fueled consumption, that in particular is really bad.
Yeah.
Now, I use the example or an analogy in my book. One of the issues is that policymakers use GDP to determine whether or not the economy is in good shape. This is a really bad idea. GDP, there's three different measures of it, but the measure I like to think of, I think it's easier to understand, is they look at all final spending in an economy. So 2/3 of final spending in America is consumption, is consumers.
Yeah.
And so they've convinced themselves that consumption spending is the fount of all economic prosperity. No. Consumption is the result of economic prosperity. Economic prosperity results from saving and investment, which then gives you the wherewithal to go and spend and consume. So when they look at consumption, and people are spending and GDP is rising, they will think that's a good thing. Well, ask yourself why GDP is rising. Is GDP rising? Is consumption growing? Because people are saving and investing and creating capital that gives them the wherewithal to sustainably consume? Or is consumption rising because people are borrowing more to consume? And if it's the latter, then it's not sustainable. Eventually, that spending is going to slow because people eventually get to the point where they can't service any more debt.
Yeah.
And so what happens, central banks see that, debt's been going up, people can't service any more debt. We need to lower interest rates so people can borrow more and consume more to get GDP growing higher again. So they lower interest rates. Sure enough, people respond accordingly. They borrow more, they spend it, they start consuming more, and GDP starts growing. They think mission accomplished. But now they can't service any more debt again, so they have to lower interest rates again. What they focus on, central banks, is called the neutral rate of interest, which is very different from the natural rate. So the neutral rate is the rate that enables just enough spending without causing inflation.
Yeah.
And so if they want to keep spending growing, they've encouraged all this debt-fueled consumption. They have to keep lowering interest rates so people can take on more and more debt. And so they think that the neutral rate, well, they're right, the neutral rate keeps grinding lower, and they're mystified as to why over the last 30 years the neutral rate of interest kept going lower and lower. Well, because it's all based on debt-fueled consumption.
Yeah.
And so the natural rate of interest is the rate of interest that results from millions of investors making their own risk return assessments. What sort of interest rate do I require from that company to lend them my money for 5 years? What sort of risk are they in terms of being able to pay me back? And if they're a higher risk, I demand a higher interest rate. If they're lower risk, a lower interest. So you've got millions of people, businesses all making these decisions. It results in a natural rate of interest, which results in the optimal allocation of capital, the most efficient allocation of capital, the most productive economy. So that's the natural rate here. But instead, central banks are encouraging debt-fueled consumption, so they keep lowering the neutral rate of interest so people can keep driving GDP higher. But every time they lower the neutral rate, it takes it below, further and further away from the natural rate, which is up here. So further and further away from the interest rate, which results in the most productive economy. And that's why productivity growth was slowing for decades. Every now and then it jumps up when there's a technology improvement like the internet in the 90s, AI today is helping. But productivity growth would be even higher if it wasn't for the distortion of interest rates.
Yeah.
And one of my favorite lines in economics is from Ludwig von Mises.
Yeah.
And he said that policymakers can deny you the right to receive this natural rate of interest, but they cannot eliminate its existence. They cannot change the fact that this is the optimal rate of interest for the economy. And yeah.
So true. I guess for me to try and bring it back down to a simpler understanding for people out there, most people just don't have the time, haven't had the education around this. I was one of them people not too long ago myself, Paul, trying to even understand the fact of even what central banks are and why they even exist and what they actually meant to do. So could you help my audience understand that in a nice, simple, basic way, mate?
Yeah, so it's a
Because
big
I think,
one. So
like some of the stuff that we've gotten into possibly has washed over some people because of that. I know myself, once
well,
upon a
good.
time, you would have talked to me about that and I would have been like, what? What even
Yeah,
is it?
yeah,
Like,
yeah. No, I mean, yeah, it's a good point. And of course I'm cutting a lot of corners here in my book. I go through everything very slowly, step by step,
yeah,
so people understand language that people can understand. And three of the first four chapters are all on explaining what money is.
yeah,
That really is the starting point and the most
yeah, it is
important.
100%. It's the key.
Yeah. So, how to explain central banks? So central banks effectively today are responsible for how quickly the money supply increases in the economy. So a central bank creates what's called a base money. Maybe I should back up a little bit. We used to, like, back 150 years ago, we had a commodity money. We had a gold standard.
Yep.
And so money was actually gold. So the government did not create the money. The money was created by people going out and mining gold and then bringing it to either a government mint or there were private mints as well. All the government did was say, well, here's how many grains of gold are in $1. And you could bring it to all your gold to the mint and they would stamp it into how many ever gold coins or how much gold you had. And that was it. And then in 1933, Franklin Roosevelt banned um, uh, the citizenry from holding gold. So you had to sell your gold to the government at $35 an ounce, or you would, or no, oh no, sorry, it was 2067, or you could go to jail for $10 or for 10 years or pay a fine of $10,000. And then,
It'd be scary
so
to
that was
most
sort of
people.
the, pardon?
It'd be scary to most people. So they
Yeah,
would have
yeah.
handed their gold over.
And and $10,000 was a lot of money back then.
Oh yeah.
And that was sort of the first nail in the coffin of the gold standard. And then in 1971, President Nixon, he finally put an end to the gold standard. Um, because in 1971, central banks from other countries could still take their US dollars that they had and bring them to America and say, we're not comfortable holding US dollars because we see you're printing so many of them. We'd rather have the gold that they represent. And they would take them to the US and say, here we want our gold instead of your US dollar. So gold was leaving America, and the gold that was backing US dollars was getting so low that President Nixon, people say, had no choice but to take the US off of the gold standard in 1971. Now, of course, he did have a choice. He could have stopped spending as much money or so much money, but it was easier just to take the US off the gold standard. So that was the dawn of the fiat currency standard, which we have today. So it's a money, dollars, US dollars, that have no backing. They used to be based on gold. Now they have no backing whatsoever. And
Yeah.
so the amount of money in the system is effectively controlled by the US Federal Reserve or the central bank. And they control that by increasing. They very rarely decrease the amount of reserves in the system, but the way they do it is it's kind of complicated. It's hard to explain in a short amount of time, but they increase what's called bank reserves. So when the central bank, they will just print up what's called bank reserves, and they will buy assets from banks. Let's say buy US treasuries, for instance, 10-year treasuries or something, or mortgage-backed securities. They take those treasuries, those assets from the banks, put them under their own central bank balance sheet, and they will credit the commercial bank's bank account at the Fed with newly created bank reserves. The commercial banks then use those bank reserves to create loans for their customers.
Okay. Yep.
So the central banks, the base money is reserves, bank reserves that only the Federal Reserve can create. But it is really a team effort because although the central bank is the only one that can create bank reserves, they still need the cooperation of the commercial banking system to start making loans on those bank reserves. Now, interestingly, what happened during the great financial crisis in 08, 09, the US Federal Reserve started printing trillions of dollars to buy mortgage-backed securities and 10-year US treasuries. But they were not
Okay.
doing this. They were not doing this to create reserves to help the banking system make more loans. No, they're doing this to drive asset prices higher, stock markets, housing prices. But the effect of buying them higher was to create trillions of dollars of new reserves in the banking system. They were worried, this is my opinion, they were worried that the commercial banks would start using all these extra reserves to go make new loans to their customers, corporations, or consumers. But if they did that, that would have resulted in higher inflation. And then the Federal Reserve would have been required to increase interest rates to stem the inflation that was happening. But rising interest rates would have tanked the asset prices, which was the whole point of quantitative easing in the first place.
Mhm.
And so they put a new rule in place where they started paying banks interest on excess reserves. So they were saying, well, if you don't make loans on these newly printed reserves, we'll pay you. So they're effectively paying banks
Wow.
not to make loans.
And so where
Anyways,
does that money come from that they're paying the banks with?
yeah, well, out of thin air, of course.
And so it's just more money printed out of thin air to pay the banks interest on reserves that they created out of thin air to start with.
Exactly.
Yeah. So how does that benefit society at all?
Benefits Wall Street.
None that ever. None that ever.
Yeah. So it's all right. Like I cut corners and
No,
it's all
no,
over the
no, no.
place
You
here, but
done
I
it.
get,
No, I think you've done a pretty decent job myself, mate, of breaking
Oh,
it
thank
down
you.
for the audience. You know, like you said, it's from what I've learned about it, Paul. It's a very deep, in-depth conversation that can take a lot longer than we've got here today to be able to really wrap your head
Yeah.
around and be able to explain it to people. But I think you've done a great job myself
Oh,
just then,
thank you.
mate, trying to put it in a little succinct form then for people to be able to get their heads around.
Oh, thank you. Thank you.
Really well done. Really well done. Um, you said future generations may actually be worse off. What are the long-term consequences of the path that we're currently on, Paul?
Well, it's not sustainable, the path that we're on. So it's going to end. And we have a chance to try and decide how it will end. Um, the risk is that instead of acknowledging that we're on a bad path and an unsustainable path, the risk is that we just stick our heads in the sand and keep kicking the can down the road and hoping that things will somehow work out. They will not.
Just been done a few times so
So,
far. I guess they just
yeah.
can be done
Well, no,
eventually.
exactly, exactly. And it can go on for a year, 5 years, 10 years, who knows? But it will not end well. So I sort of see it in, we have two choices. The delusional kicking the can down the road um, approach, where it eventually ends in a catastrophe, a financial crisis that dwarfs the one we had in 08, 09. And so if that happens, then one of two things could happen. Either we finally say, okay, we're do the right thing. We're finally going to not waste a crisis. During crisis, when people are already suffering, they're more with the pain and
All right, yep. Lost you there for a second, Paul. You're frozen. Hang on there, folks. Old internet's doing its
evil.
doing its thing where it doesn't want to play the game.
Can you hear me, Rodney?
Yeah, you're coming back, mate. You're coming back.
Oh, sorry about that.
We were down
Where'd I
in,
leave
in
off?
Antarctica there for a bit, mate. You were frozen.
So yeah, I can't remember. I don't know where I was cut off, but so if we have a crisis, they'll either finally do the right thing or we will have social upheaval and you will have socialism. And if you think things are bad now, it'll be far, far worse if we end up in a socialist state.
That doesn't sound
So
real promising to me.
no. And so that's the first sort of uh, path. The second one, and what I'm trying to encourage or trying to help along, is that before we wait for a crisis to happen, that we decide to change things ourselves.
Yeah. So,
We
what are the
we
key
acknowledge
changes or
that.
reforms that you could suggest then for where we move things in the right direction, Paul?
Well,
What's
yeah, so
realistic versus ideal?
yeah, well, yeah. Well, step one is what you're doing, helping educate people in terms of how things really work. Trying to do
Right.
away with these something for nothing myth, rainbows and buttercups for everybody as far as the eye can see. Um, so that's step one. And then step two is just going through that list that I have in my book. Even if you just did the first three, which is stop rapidly increasing the money supply, stop distorting interest rates, which Jim Grant says is the most important price in the economy, and stop bailing out Wall Street, Just those three things alone would take us a long way in terms of where we need to be. Two other things, government and finance. So I'm in the finance industry.
Yep.
Now, like the finance industry does not really create any capital of its own. We're facilitators of capital creation. You might say that the facilitation is also capital, like, but we help people in the real economy create capital.
Yep.
Government does not create any capital. Like I said earlier, all the capital that the government spends, it first obtains from the private sector, either via taxation, borrowing, or printing money. And over the decades, both finance and government, the facilitators of capital creation, have grown as a bigger
Monstrously.
percentage of the economy. So the real economy has got this growing burden on its back of government, taxes, and finance, fees that is having to like drag along with it as it's trying to grow, as it's trying to move forward.
Yep.
So it's not that it stopped moving forward, but it stopped moving forward at the rate that it was in previous decades because of this. And of course, people in finance and people in government, everybody thinks they're really important. We all think we're important, and the world can't do without us and all this kind of garbage. And it's the old saying, the cemeteries are full of indispensable people, right? And but
Yep.
it's not that you're a bad person, or you're not, it's not that you don't have an important role. There's just too many of us. There's not enough people in the real economy. And so people are going to, government and finance, they're going to protect their turf tooth and nail, right? Because they don't want to have to go out there and in the real economy and create real capital.
Yeah.
And so that, that has to change as well. But those, I guess those five things are the, what I would point to. I mean, if we did all that, the world would be a much better place.
Yeah. Wouldn't it ever? Wouldn't it ever? Yeah, I mean, I guess some of them things would be quite hard and will be quite hard to change and implement, I guess, going forward. And that's like when we were speaking before recording today, that in regards to that, trying to share this knowledge and education with people so that you can bring it up from the ground level up from a grassroots level, because it's never going to come from down upon high because of how much it's benefiting
No,
those at the top of the tree.
exactly, exactly. But
So
but but Rodney, I think the average person is very smart.
yes,
You
I
know,
agree too.
I really believe that. I mean, there's always exceptions, of course, but but the average person is very smart, particularly when it comes to their own hard-earned capital, with their own skin in the game. They don't need to be told by policymakers how much they should be spending for a house or how much of their money they should be consuming rather than saving. All this nonsense. No, people know. And so you just got to give them a chance, empower them with understanding and knowledge, and I think the rest will take care of itself.
Yeah, for sure, mate. For sure. Well said. Well said. Um, I reckon this is a pretty critical one myself. For someone listening who's not in control of policy, what can everyday people actually do to better protect themselves and make smarter decisions in the financial system and world that we currently live in today? And where do you
Yeah,
reckon they should start?
yeah. Well, so it's not easy, and there are no guarantees. Um, so what you need to do is be aware of the nonsense, but
Yeah.
participate as carefully as you can in the nonsense until the system is fixed, or be protected if the whole thing blows up, or lose less than you otherwise would if the whole thing blows up.
Okay. So,
So what I do, I, my personal wealth, I have, I invest in high quality with mutual funds that I used to manage. My team manages it now. And so I invest in those mutual funds, which are invested in high quality businesses around the world who have a sustainable competitive advantage and they operate with strong balance sheets. And for the most part, the valuations are okay. And so if the world blows up, my stock portfolio will go down, not as much as the markets, but it'll go down. But from a 10, 15-year perspective, as long as those companies continue to create capital, that will push their share prices up again. And so I'll probably be okay over time. One of the big risks is that policymakers revert to something called financial repression to deal with all the debt that the governments are taking on. And so they will rapidly increase the money supply, create inflation, inflate away the value of the debt, and also inflate away the value of all your money savings, of your income, of your pension income, and stuff like that.
Okay. I could just
And
interrupt there, Paul. You're just getting a little bit
yeah,
quiet, mate. Just having a little bit of
oh
trouble
yeah,
hearing you at my end.
is that better?
Yeah, yeah, mate, that is good. Sorry,
Okay.
didn't mean to cut you off.
Yeah. No, 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 it's all right. Hang on, let me just put this maximum. So financial repression, if they do this, your again, your money holdings will be inflated away. Stocks might still do well, but in real terms, they won't. And so I have gold in my personal portfolio, and I view that as a hedge rather than an investment. So if they revert to financial repression, gold probably will do very well. And then I have some real estate, and they can't print houses yet. But the trouble with real estate and houses is currently they're very expensive.
So true.
And so if you can find real estate that's not overly priced and you're going to hold it for a long time, then I think that could be a good store of wealth as well. And so I have and I've got some high interest savings accounts or cash investments. And so I've got a balance. I've got exposure to different things, but all in very high quality areas, in areas that I understand and areas that I know. And so if they do financial repression in real terms, my stocks won't do well, but gold probably will. If they actually try to fix the system and they stop growing the money supply rapidly, my gold will probably go down significantly in price, but my stock portfolio will do well in real terms. Right? So you put it
Okay.
all together and I'll be okay, but I'm not trying to outsmart the system and trying to make a fortune with my portfolio. I'm trying to protect my wealth and very carefully grow it. And so that would be my advice to people. Forget about the get rich quick schemes and stuff like that. You might be lucky, but you
Predominantly, they
probably
seem to
won't.
play out to get rich, get poor quick schemes, I reckon.
Well, yeah, and there are, if you're trying to do this, there are a lot of smart people out there, very smart people, hedge funds, Wall Street, or whatever. Really hard to compete with them in that game where you're trying to benefit at somebody else's expense. You're probably going to lose. So just keep it real, invest in high quality assets, and those assets will probably skate you on time over or on side over time.
Ultimately, I guess you break that down. I look at it in the context of like real hard tangible assets. So I'm a big advocate for gold and silver myself,
Yeah.
and real estate. Ultimately, yes, we can build more high houses, but there's no more land being made, as far as I'm aware. So
Mm-hmm.
things
Mm-hmm.
like that, stocks in good companies who are really producing for society. So
Yeah.
I guess that's the next best thing to out and out hard tangible assets that you can touch and feel.
Yeah. No,
So
exactly.
we've got
Exactly. And,
something called
and
Bitcoin today, which is an interesting thing. I have high hopes for it myself. I think it's
yeah,
got some really good um, propositions behind it and
I, I've I've got a
what it's
little
about.
Bitcoin as well in my
And so
portfolio.
I look at it
Hmm.
as a speculation myself at the moment. But Whether that's right or wrong, I don't know. Time will tell. But
Yeah, I don't think there's anything wrong with holding a bit of Bitcoin,
no,
and
no, no. I think so.
so
Like we're in a
yeah,
digital world today, and probably going to head
yeah,
down that road more and more as time ticks by. But no matter what, we still live in a physical world. So real tangible
yeah,
things is what you still need to hold on to. The way I look at
makes
it,
me feel.
especially with the gold and silver, it's the preservation of purchasing power over long
Hmm.
periods of time. So whatever wealth you have built, it'll maintain that for you over long periods of time. So it's important to build your wealth and grow your wealth, and you do that through being productive in society, but
Hmm.
you want to protect it. Hey, the way I look at it.
Absolutely, absolutely. You don't want it taken from you.
No, no, because there's plenty out there looking to do that, and sadly,
Exactly.
that like what we've been talking about here today, the system at large is it seems to be designed to do exactly that.
Hmm. Yeah. No.
Yeah,
No.
like
Agreed.
it's predatory as such. It's preying on you all the time.
Well, yeah, it's morphed into rather than a free market capitalist system where you only benefit to the extent that you benefit somebody else, it's benefiting at the expense of somebody else. And I like to think about it as it's like a large game of poker. And so at the poker table, there's no capital creation. It's not that everybody's better off. You only benefit at the expense of other people. And what you end up with is one winner and a bunch of losers, which should sound very familiar to your listeners in terms of what's going on today.
Yes, sad but true, eh? Sad but true.
Yeah, yeah, yeah.
Big time, big time. So, what would you say, Paul? Despite everything you've seen, what gives you hope that things can actually turn around, mate?
Well,
Because this is something I think that we need to focus on
yeah.
and give
So,
people
yeah.
the
So,
possibility of prosperity
yeah.
for society.
Well, like I said earlier, I've got great faith in people. I think people are smart. I think people are generally good, want to do the right thing. And same with our policymakers. But a lot of our policymakers as well don't really understand how an economy really works and how wealth is really and truly generated. So, so that's the first thing that gives me hope. The second thing is that there are all kinds of people like yourself out there, increasingly, who get it and who are doing their best to spread the word and educate people and help them understand what the hell's going on to get ahead of the catastrophe. And so that gives me hope and confidence that eventually we'll do the right thing. And apart from that, I don't know that I need anything else. It just, the longer it goes, I just think the more obvious it's going to become that it's going to end really badly unless we do something. That
Yeah,
even those in power will start to get it.
yeah,
Yeah,
well,
I, yeah, I do believe things will work out,
yeah.
but it's not
We're
going to
gonna
be
get
easy.
probably gonna get tougher before it gets better.
It's not going to be without pain, and particularly for my generation, because we've benefited the most. But it'll be very good for the next generation. Not that they're going to benefit at our expense. They're just going to be taking back the wealth that we didn't deserve in the first place.
Yeah, so it'll
Right.
be a bit more
And
evenly distributed, I guess, in that
fairly
sense.
distributed. I prefer the word fairly distributed than evenly, if you know what
So
I mean.
definitely, mate. And myself, I try to be as positive as I can be every day, and look at
Yep.
life in a positive light. There's plenty of negativity in the world. That's just a part of it. It's the duality of life.
Hmm.
There's positive and negative energy around us all the time, and I guess it's a matter of what you latch onto. I guess more so one than the other.
Yeah, well, you can make
Like
that
to be
choice, right?
like to
And
be more
but
on the
it's
positive
easier
side.
it's easier to be positive when you know what's going on.
Yeah, sure, sure. Well and truly. Um, coming up on time here, Paul. Come up with one more question here for you, I think, mate, before we
Okay?
run it
Yep.
up today and start to close it out. Is the current financial system actually designed to benefit everyone, do you reckon, mate? Or does it naturally favour a small group at the top? And because of that, is it just again because of some of the stuff we've spoken about, just the system, or is there people who have designed and are controlling the system at the top of the tree that's feeding to them?
Yeah, I don't believe it's a conspiracy. I do believe that those in charge um, have convinced themselves that the way the system works and their role in it is for the greater good. They do believe that. They thought that, yes, we'll drive asset prices higher. And yes, of course, the asset owners will benefit the most from that. But don't worry, because over time, all the benefits will trickle down to everybody else. And it's just self-serving and delusional and arrogance, but it's not evil. And because that they've chose the path of least resistance. They chose the path of the best recognition for them. They love it when Wall Street cheers their interest rate cutting actions or when they announce another round of QE and Wall Street cheers and stock markets go higher. They feel really good about themselves. It's almost like they can't resist. It's like an addiction that they have. Um, but I really don't believe that they're trying to benefit the rich people at the expense of everybody else. I mean, I could be wrong, but I don't believe it.
Okay, fair enough, mate. Do you reckon, in regards to saying that, are we actually getting richer as a society, or just feeling richer while the system quietly keeps taking more and more from us, Paul? And if people
Well, yeah,
truly understood how money works, do you think they would make very different financial decisions in regards to all of that?
yes, I do. I do think they'd make better decisions if they really understood, how money works. But the first part of your question was, is, are we not as rich as we think we are? And that is absolutely the case. Policymakers will always they'll point to household wealth. Oh, look, it's hitting all new records. Well, they include stock portfolios and house prices. So if like our house has gone up 4 times in value, so let's say you've got an island economy and you've got 3 houses on there, and they all keep buying those houses from each other, those 3 houses, at higher and higher prices. Has the wealth of that island gone up? Has more capital been created? No, you still only have 3 houses. It's just that people are paying more and more for them. There's no more capital in society. And so, and people, the younger people are not able to buy all those high-priced houses from the older people. They just can't afford it. So you're not going to get that wealth, or not everybody's going to get it. So people are not nearly, and people who own government bonds. So the US is what, $39 trillion in debt. So there's 39 trillion in treasuries out there.
The mind-bending
So
number, isn't it?
yeah, so all the people who own those treasuries, hedge funds or pension funds or whatever, they're not nearly as wealthy as they think they are because that $39 trillion is not going to get repaid in real terms. The central bank is going to print the money to pay that debt back. And so you will
What's
get
that?
39 trillion paid back, but that $39 trillion is going to be worth a fraction of what it was when it was initially lent. So
So
the
what you mean
wealth
there is
is
is its purchasing power that money will have.
exactly, exactly.
Yeah, I remember when I first learned about like trying to wrap your head around how much $1 trillion is. Like once upon a time, you used to. I remember growing
Mm.
up and you hear people talking about becoming a millionaire. Like $1 million was just wow, man. And then they started using billions, and it was like even
Yeah,
more mind-boggling. And then all of a sudden, out of nowhere, they come up with these words called trillions, and it's like when you try and break it down into a concept to understand it in time, because it's easy to say it, but it's so hard to wrap your head around what a
yeah, you
trillion dollars
can't.
is. But if you break it
Yeah,
down into time as a ways and means to understand it, a trillion seconds is 31,600 years.
Jesus.
Like it's a long time. So that's a lot of money. Hey?
That is, yeah, it's
And
a good way of
that
looking
level
at
of
it. Yeah.
debt, which is 38, 39 trillion, like that's just that. I look at it in that context as it's just stealing all of that wealth from the future.
Hmm.
So
A
I
lot of
guess,
it, that's for sure.
yeah. So that's
That's for
why
sure.
the younger generations coming up today can't afford anything because their wealth's already been taken from them.
Yeah. Yeah. And these future tax liabilities that the going to be foisted on the next generation to pay for the benefits of the older generation who didn't put as much in as they took out. You know,
This takes us through to where we're at. I guess with all of it is and trying to find the positive point in it is that we need change in the system. We need a different system, and the only way you're going to get that is from the ground up. So we need to educate people.
exactly. Exactly.
Is could you before we finish up today, Paul? Could you let people know where they can find you, mate, and find your information and your newsletter and things like that, mate, so that people can
Yeah.
can get some more of this information that they desperately need.
Yeah. Thank you, Rodney. Yeah. So my website is Political Economy. So it's my first name, Paul, itical, instead of political, is
Nice play on
politicaleconomy.com.
words.
Thank you. So politicaleconomy.com. And there people can sign up for my free weekly blog. Just put your email in and you'll get a weekly notification. I've got all my past blogs there, interviews and stuff like that. My book is called Capital Offense: Why Some Benefit at Your Expense. And you can buy that online. And it's also available in Audible or Audible
Okay.
version.
Yep.
So
That's
if you
cool.
prefer to listen to it, and then I got my social media links. They're also on my website at politicaleconomy.com. So follow me on X or LinkedIn, stuff like that. So yeah,
Awesome. Excellent, Paul. Love it, mate. Well, we'll make sure all of your links are on the show notes, mate, so people can
thank
find them
you.
there and can start digging into some of your work, mate, for sure. Because there's a
Oh,
there's a lot there's a lot of great information there that you just could get from Paul's knowledge and know-how throughout his time in the system and the markets. And if you got value from today's episode, folks, follow the show, share it with a fellow money stacker, keep on building, eh? Truth, freedom, and legacy, and keep on stacking. Thanks, Paul. Have a good day, mate.
This has been another episode of The Rodney Bull Show, a Rebel Edge production. Please share with your family and friends, and don't forget to like, subscribe, and leave a review.